The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good morning, folks. We're going to start this week by taking a trip down memory lane. I've posted a chart of 1987 in here from August through January of 1988. What I wanted to go over with you is to show you what is a similar pattern that we have going on in the stock market that is comparable to what we did then and what we're doing now. However, you know, the markets do the same thing, but they don't do exactly the same thing. So we got to keep that in mind. But let's just walk through a little history, because I know most of the folks, you know, or certain, some of you weren't even born back, 30 some years ago. But how many years ago was that? That was 28 years ago. Yeah, 28 years ago. Yeah, most of you people are above 28, I guess, but not much, some of you. Anyway, on August the 25th of 1987, we had a 5-planet conjunction of all the inner planets, Mercury, Mars, Venus, Jupiter, Uranus, all were at, and the moon were all at 0 degrees. I mean, that just was unheard of. It was a thing called harmonic convergence. The market had gone straight up from July into August the 25th, and it topped on that day. On August the 25th, the Dow topped at around 2742, as I recall. The previous week, I had been a regular on TFNN, which is now CNBC. Bill Griffith and I have been friends for a long time, and I was very good friends with Sue Herrera because she was dating my best friend at the time. And I also knew Ron Ansana. He was just a high school or college kid at USC doing graduate work in journalism at TFNN. And so it was just there was John Bollinger was on the show, and some guy from Michigan who was the best analyst I'd seen in a long time. I lost track of him. But Ed Hart was on the show. It was a fun thing. But I would go on about every 3 weeks. I would drive down from Pismo Beach down to Los Angeles and do the show live and then go back. Well, that previous week I had been on, and I told Bill that, the market was probably going to top on, around that date, around the 25th, and that sometime during the month of October, the Dow Jones was going to be down more than 300 points in one day. Now, I arrived at that because the biggest correction the Dow had from 1982 to 1987 was 191 points. So I multiplied that times 1.618, and that gave me 300 points. Well, on October the 19th, the Dow was down 555, I believe, which was down about 16%. But the interesting part about this chart is what happened. We topped on August the 25th. We came down into the 26th of October, which was a solar eclipse, as I believe, and then we rallied up into October 2nd, which was a Venus conjunct Uranus at that time, and there was a full moon within a day or 2 days of that, I believe. And but let me go through the story though. But on October the on August the 25th, I had bought October puts, and I bought them out of the money pretty deep because I thought the market was going to go down quite a bit, and it broke really good into September 26th, and I held them during that rally from August the 26th, September the 26th to October the 2nd. Then the market broke really badly, and then on Friday, the 16th of October, the weekend before the crash, the Dow was down about 105, 110 points. It was triple digit down, which was quite a bit. When you were dealing at 2,500, you're talking about a 3.5–4% drop. And my options expired on that day, and I was rather happy because I had made, I think, 10 times what I had put in those things because I bought them way out of the money. And so I was really happy. Had I bought November puts, instead of the October puts, I would have made 100 times what I made on the other ones. However, trying to get out of those puts would have been extremely difficult because there was no market. This crash, folks, most of you folks have no idea what it was like. But it was the scariest day I've ever seen in commodities and stocks. I never want to see that again. I don't want anybody else to see that again either. The market completely dried up. The spread on the S&P was somewhere between 10, 20, or 30 points. It was trading at around 260. So the bid would be at 220, the offer would be at 280 or 290. That's how the spreads were $10,000-$15,000 apart. It was so crazy. And you couldn't even get a price on some of these things. That's how bad it was. Well, in the period of the next 36 hours, the protection team came in, and basically what happened at the bottom is Greenspan said we're going to change the accounting, how these banks can and brokerage firms can value their value. Instead of going at cost, they valued them at the market. So even though the market had dropped 60%, they were able to value them down 60% as opposed to being up where they were down so much. Well, 2 years later, the market started to go. I believe it took well over 2 years for the market to regain all of that back, but it certainly did. The low that we had on October the 19th was an exact, to 0.001% of the 61% retracement in the low on the Dow on on August the 9th of 1982 to the low on October the 19th, 1987 was an exact to the penny 0.618 retracement in the Dow and also on the S&P 500. And from there, we went to 18,300 so far, but we'll wait and see. So now what we're going to do here is I would like to bring up the chart for where we are right now. And I want to show you that we have some similarities, but there are also a few differences, as always, because the markets are the same, but they're never exact. So if you take a look here, we made a bottom in October. We rallied up, and we've been basically no higher than 18,300 in the Dow for all that time. Now, after the high was made back on May the 19th, which was the new moon and Mercury retrograde, we made a beautiful ABCD down pattern right on July the 10th. We rallied for 10 days to the 78.6% retracement in the Dow. The New York Stock Exchange Index rallied to the 0.618 retracement, much like it did in 1987. On Friday of 1987, we had a poor close. And what did we have Friday? We had a poor close on Friday. So gapping down on Monday, you could be the start of a crash. Now, I don't know how big of a crash it is. I don't know if it's going to be a crash. All I'm saying that, you ought to pay attention to this because it's just history repeating itself, and not many people will go back and remember what happened 28 years ago. So you just have to remember. Now, there's a couple things about this chart that are actually worse than it was in 1987. First of all, this year, we've taken out that most important cycle low of March the 13th. We took that out. We took it out in the S&P. We took it out in the Dow. We did not take it out in the NASDAQ. So I put this little reminder in here, chance favors the prepared mind. So just be careful here. Now, the target on this, which would be sometime between the target for this week is the Dow down 500 points, and we're down 100 so far today, so that's in the ballpark of what might happen, but we'll wait and see. But the 1.618 of the move between October and March measures to 15,000 on the Dow. That's down about 12% from where we are now. Now, that wouldn't be a crash, but that would certainly, get somebody's attention. Now, remember, China was down 8.5% today. So they're not out of the woods yet. They gave back everything that they tried to make over the last week or so, almost. They gave back more than 70% of it. So these are the types of things that I'm keeping an eye on this week, to really see, what is, going on with some of these things. Now, I wanted to give you a quick little, I've got a really neat little educational thing from my friend and partner, Jim Bartolioni. He sent me a couple of really neat charts, and one of them I'm going to show you now, but there's another one here on the euro yen that is really interesting to show you some of the technical things that he does with harmonics and the market repeating itself over and over again. But before we do that, we're going to pull up the chart on the DAX, which is the German stock market. And as you can see here, this chart goes back quite a ways. It's well over, let me see, how many years is this? Yeah, this goes back about 2 years. And as you can see, we had the big ABCD to the downside, and then we had that big rally. And now the same thing has happened here, is that we made a 61% retracement rally here just a few weeks ago. What am I talking about? It was just a week ago Friday. And now we've had a couple of gaps down, and right now we're trading just a little below the 61% retracement of that BC swing. So this has happened too quickly with that gap down and the wider bars. Unless the market would, turn around and retrace everything today and close sharply higher, it certainly looks like we're heading down for another a minimum of a 10% move in the DAX at that time too. So that's another one that looks a little bit negative. So you have China, Germany, a couple of the majors. The Nikkei was down, I think 3% last night. The Hang Seng was down 3%, as I recall. So there was a lot of selling coming across the tape, and this is what started us down, because we actually opened slightly higher to unchanged in the stock indices on Sunday, and then it was the rest of the world that started to pull us down. Now remember, it's going to be different this time, because we have the Fed is watching our back and everything, which is good, but you also have the situation where you're going to be looking at a place where we have so much debt. Remember, China's debt between 2000 and 2015 has gone up tenfold, from 2 trillion to 27 trillion. And our debt is, and just in the last 4 years, our debt has gone up fourfold. Our money supply has gone, basically exponential. And so whether that's going to be, reminiscent of this or not. Now, we've got a good rally coming in bonds, which shouldn't be surprising, because we've had a good down move, and we're having a big ABCD correction that should come up around the 158 level in the September bonds, and we're trading at 155 and change right now. So that's what it looks like, from the what we're looking at now. We're going to have to take a break here soon to pay I have to disagree with you on that, Mr. Z. Mr. Z said debt is not finance. Well, debt is money that you owe, and that's part of finance from old Indiana University, but who knows? We'll see. It's all power. We're going to take a break here. We got stocks a little bit lower, gold selling off a bit. We'll be right back after these few words.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened, and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, the next chart that I've posted into Tiger TV is a chart from my good buddy and trading partner, Jim Bartolioni. Jim is one of 4 F-16 pilots that I have as students. I've been very fortunate to know these folks over the past 15 years. I also have their leader, and his handle is Rooster. So they've all got names like Bart, Red Robin, and Rooster, and Blackjack, and what's the other one? There's no Top Gun, but they showed me I have pictures of them with their planes and everything, so it's really cool. But these guys are really superb traders because they're very disciplined, and pilots have a tendency to be better at technical analysis because the things they look at for their flight plans are nothing more than X and Y coordinates. And if you'll take a look at this chart, which is the Euro-Yen, it basically shows the symmetry that is in the Euro-Yen. This is one of the most popular of all cross rates to trade because of the Euro and the Yen. Gee, that's really mind-blowing, isn't it, Larry? You ought to start thinking of things a little more in depth. But anyway, you can see by looking at this as a glance that it's a beautiful head and shoulders pattern. But if you notice the fold back, this is the work from our good friend Michael Jenkins of Cycles, Stock Market Cycles. I believe that's what his publication is, but he looks at the market as repeating over and over again. And the foldback is basically as if you folded the paper in half and overlaid it, it would be a mirror image of the other. And so what they're really doing here is that they're basically looking at the the mirror image of something happening. And so that's what they're doing. It's just showing that the same thing repeats, over and over again. So, so anyway, yes, I do know Michael Jenkins very well. He's a nice fellow, and he certainly does a great deal of wonderful research. Now, I've asked to take a look at the emerging markets. And as you can see, we've been in a bearish market for emerging markets ever since 2011. We're starting to accelerate to the downside. As a matter of fact, it was interesting that someone brought this up just a few minutes ago, because if you look at this left and right shoulders, this is almost exactly what we were looking at when we were looking at Jim's chart on the euro yen. So, it's the same pattern, just using a different vehicle and a different time frame, of course. But this is what patterns do, is they repeat over and over again. And that's what we have going on in the stock market now, folks. We've got a situation that mimics what happened in 1987. Whether it's going to happen the same way or not, I don't know. But because patterns do have a tendency to repeat, and if you're waiting for something like that to happen and you can enter without risking too much, that's the idea of what you're trying to do. Now, I'm going to be doing a webinar this afternoon at 5:30 Eastern time for 1 hour, where I'm going to go over what I think are the best trades here over the next month or so. I'm not going to spend a lot of time talking about patterns, guys. I'm going to show a few what they mean, but as far as teaching you what a Gartley or a butterfly ABCDs and go through the mathematics, that is not what this is about. This is about actually looking for something to do to try to make a couple of bucks. That's what it's amounting to. It's for the 24/7 folks that we have here at TFNN, where I send out my videos each day to show what I'm doing in charts. We're positioned correctly right now. It might not be at the end of the day, but we've been short for a few days here in stocks, and they seem to be working. And we'll see if this is going to continue. But there's some other things that are on the horizon that looks really good. One of them is, I have to give you a little tiny hint. It's very, very bright yellow, and it glitters. That's all I'm going to tell you. Anyway, that one's got a real shot. This has got everything on it that you could ask for. So whether it's going to work or not, I don't know. But I know it's going to be one low-risk puppy, because you'll be able to get in without too much risk, especially down at these levels. So we'll wait and see. But that's what we're going to be doing on the show for the webinar today. And it's free. All you have to do is to go into TFNN and log in, and then you can definitely look at it. Now, we've got a situation going in a couple of major stocks that look very, very interesting. Of course, they're in the news quite a bit, and it looks like these were things that I was happened to be watching last week. We talked about it a little bit. The first one is Google, and as you can see here, we're going to be gapping down this morning in Google, and it's going to leave a potential island in Google, which this would be a big island, because it went to the 1.618 up there at 675, made a high of 680, and is now trading quite a bit below 623. So that will leave a island reversal. Not a clear one, but it's pretty clear. But whether it's going to be going up or down, we'll have to wait and see. Okay, we'll take a little break here. When we get back, we're going to be talking about some bonds and also Starbucks, which I think is also very interesting here.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we were looking at Google gapping down below Friday's lows. We also took a look here at Amazon, and Amazon did not leave an island reversal as yet. It might do it tomorrow, but it certainly didn't do it today because it opened within the range of what happened on Friday. It's still down a small amount, but it did not leave an island reversal, so that's still potentially in the cards. Now, we've had falling commodity prices for a very, very long time here, and it looks like it's continuing down for quite some time. We got copper down quite a bit, platinum down quite a bit, and then we have the Dow Jones Transportation that moves these products, and as you can see, that's been going down since November, and it's in a very pronounced downtrend now. After we just had a 2-week rally, much like we had from the end of May to early June. We had a rally from July the 10th to July the 20th, and now we're far below the 786, and that gives us a price objective of at least 3% lower down to the 7,800 level in the Dow Jones Transportation if that's going to case. Commodity prices have been hit just about everywhere, folks. But a couple of these markets, we never talk about very much. But there's one I wanted to bring to your attention here, and that is one of my favorite movie characters, of course, is none other than Sean Connery, 007, Where Diamonds Are Forever. And what we're going to do now is we're going to take a look at the diamond market. And you can see since 2011, we've been in a very strong downtrend, and the market has, for diamonds, has started to accelerate this past week. This chart comes from us, way of one of our friends in the room, Mr. Fletch, and I thought it was interesting to see what's happening. So marriage is going to be cheaper, folks. And I guess it's gender specific here, but who knows? All right, now the next one we want to take a look at here is to look at the, Larry. Oh, I know what I wanted to show you here. Something I wanted to show you Starbucks, because this is something that looks very interesting from the short side. We'll take a look at it here. And this is one that has the potential. It hasn't happened yet, of course, but maybe this week you could get it, because we have a gap up on Starbucks at the 54.75 level, and we got up to 60 and change, and so we could be looking at a potential island reversal here in this for some time. Okay, we got our friend from George in Hong Kong. George, how are you?
Yes, hi, Larry. How are you?
I'm good. What can I do for you, my friend?
Thank you. Can I ask, can you give me an update about XXI?
Sure.
Today, the Chinese market plunged about 8%.
Yes.
And the last low is about 2 weeks ago, I think.
Yes.
It's the 8th of July, and it hit the low of 39.
Yes.
Can you show me the XXI graph so that
sure.
I can take a look?
I'm going to put it into Tiger TV here, and we did have a big gap down, which reflects what's happened in the market. So what we want to be able to do here is to what have I done? Hold on one second, George. I've got a small problem. I got to figure out what happened to my TFNN feed, for heaven's sakes. Oh dear. You can hear me okay, can't you, George?
Yes, very clearly.
I don't understand why I can't post anything into the room. I must stay with me one second, my friend, while I get back in here.
Okay.
Because I must have hit a wrong button, which is not unusual for me. There, I'm back now. So let me give me a second here to update this, and then we'll be ready to go here, because we're down quite a bit. These markets are very bearish, George. I mean, there's just nothing that you can do to say anything about that. I mean, we had a very small rally in Shanghai, about a 50% rally of the move down, and then with the big move down last night, 8%. I don't know what caused it, because I was asleep. It was probably some kind of report, but the Chinese government's not going to be able to do too much about it, because this is fear and greed, and fear is a greater emotion than greed. So with all these gaps that we're having here, you just got to be tremendously careful. That's the bottom line.
Right.
Does that help?
Do you think that it will? Yeah. Do you think it will drop below the last low?
Yes. Yeah, I think they've got some people trapped in there, and there's a big problem. And when they closed the market, that was the worst thing they could do, was to stop 50% of the stocks from being sold. Because as soon as they allow that to happen, the people that have not got their money out, they want to get their money out, and they'll start selling. And we've seen this happen time and time again in markets where the government tries to come in, or the Fed, and they can affect things for a while, maybe even quite a while, but they can't go against nature's law. And that's what quantitative easing has done, George. These QE programs that we've had all over the world, in China, Europe, United States, they've shifted the economic cycle. We used to have these ups and downs every 4.5 years, where the markets and economies would wash themselves out. But with pumping money in it for 7 years, it's stretched it out, and that rubber band is going to snap. And no one knows what's going to be the repercussions of it. But the Fed does not have our backs. They worry about the Fed more than they worry about us. And if you don't believe that, you're being quite naive, my friend.
Being Chinese, our greatest worry is that the Chinese government always interfere the Chinese stock market.
Oh, this is true.
They will suddenly they suddenly just release some news and the market will jump up, regardless of the fundamental. So it's very dangerous if we short the low, if it beyond the low of last low.
Well, George, think of this. Look at the commodity prices for the last 18 months, my friend. Rubber, steel, tin, aluminum, diamonds, gold, silver, everything has been dropping. And China uses all this stuff to make the products. They make 50% of the products in the world, I believe, because everything you see is either made in China or India, and mostly China. So if they're not buying these raw materials and they're going down in price, means they're not making it. And then if you look at the Dow Jones Transportation Index and the other index, like the Dry Baltic Index of shipping rates and stuff, you'll see that there's not shipping a lot of stuff. There's not a lot of economy going on out there. So there's something wrong. The only thing that's up in the air is the stock market, and that's been pumped up by quantitative easing, it looks like. So if it starts down, God only knows what could happen, and that's what's scary about it, because it is different this time.
Right. Can you also share your view about the gold mining stock? Because
the gold mining stocks are really well. I don't want to give too much away, but I'm going to do a webinar tonight where I'm going to focus on that, because the gold mining stocks have been beaten up quite a bit, partly because of the debt. I don't know if you know this or not, but gold mining companies have been going into debt quite a bit to increase their mining, which increases more gold, and that causes the price to go down. And so they've got that problem ahead of it. But the metal itself, both gold and silver, are in bear markets, but that doesn't mean you can't get a $200 rally in gold, and we could get a $150 to $200 rally in gold without much trouble. And I'll go into that on the webinar today, but right now I don't want to share too much of it, but I'm rather bullish gold in here. That's the way I look at it, but we'll wait and see what happens.
Larry, for the last question is, if this stock market crash, which country do you think it will affect most severely?
Oh, I don't know the answer to that, George. That's beyond my pay grade to try to think about that. I basically try to, figure out a way to make a few dollars off of it. But frankly, the U.S. market is the highest up, and it's still the highest, so it has the propensity to drop the most. I don't think it's going to hurt Greece much, because that market's been killed. Russia's been killed. China's had a big run up, and it's correcting. But I think the big correction would probably be here in the United States. And the old market adage is, if the United States catches a cold, the rest of the world gets pneumonia. So we have to keep an eye on that. And the big unknown, of course, is quantitative easing. What did this mean, and how are they going to get out of it? That's the bottom line. It'll be nice to see this unfold.
Yeah. In your newsletter, you said before the crash in 1987, you know it was going to crash on Friday, right? Friday night.
That Friday night, you had a pretty good idea that was going to happen. Now, we're down today, but it's certainly not a crash. We're down a little bit. But, the end of the we have a really strong cycle coming in here on July 30th and the end of the week. July 31st, we have, of course, the full moon. So these are things that should be pulling the market down. That don't mean we can't get a 150, 200-point rally in the Dow without any trouble. I mean, there's enough people out there wanting to buy dips that could happen. But the change in the continuity of thought is present. The people that were bullish are starting to look around and, wondering what's happening to stocks that have, gotten hit really bad. We still have Amazon's way up in the air, and Google's still way up in the air, and Apple's still way up in the air. But, some of these other stocks, some of these biotech stocks are getting hit pretty hard. And the banking stocks have also started to shake a little bit, and the NASDAQ stocks have started to shake a little bit too. So they're starting to see a little bit of leakage in the boat.
And Larry, for your career life, before every crash, can you every time manage yourself to get out of the position, long position before the crash?
No. I haven't been in any crashes. The crash that paid me the most money was 1974, the October crash of 1974. The Dow went from 1,000 to 500. From July to October of 1974. I lost everything I had. I lost, I didn't lose everything because I'd spent a lot of money and I still had a few bucks, but I lost all my trading account. And it was the best trade I ever did, George, because if I hadn't lost that, I never would have went back to learn why markets operate. And my teacher told me to take a look at the Gartley book and understand patterns and understand, the ratios of the Fibonacci summation sequence. So frankly, my best trade was when I lost all my money in October of 1974. And George, I got out on the absolute low day. I got blown out of all my positions, limit down, and most of them closed limit up, and that was the big bottom that lasted for, it still lasted. I mean, it still went up. But if I hadn't lost all my money, I never would have learned what I had to learn because the old Chinese adage, George, the smart man learns from his mistakes, but the wise man learns from the mistakes of others. I've always been a smart man. I've never been able to do the wise man thing. So sometimes your best when God closes a door, He probably opens a big window in your house. So keep that in mind.
Sometimes it's very unhappy to see the YouTube that less than 100 views of your your video after one day. I always look at the statistics about your how many people will listen to your show.
Oh, sure. No, that's true. Usually when I give a talk of 100 people, there'll be 2 people in the audience that have an interest in it. That's been this case since I started talking 35 years ago. And I know I have a good listening audience because I get emails from people, but frankly, very few people, respond on how do I learn to do this? And the reason why is twofold. One, it's not easy and it takes time to learn it. It takes a couple of years to learn to be a trader. But the second thing is most people are flat out lazy, George. They want someone to tell them what to do and not take the responsibility for it. That's the bottom line. That's really what it's all about.
Yeah, frankly, I learned a lot from you since you come to Hong Kong for 1.5 years, I think.
Well, I've been going to Hong Kong for a lot of times. I got a lot of friends over there, and you've done a great job yourself. So all I did was show you where to plant the tree, pal. You dug the hole, put the tree in, fertilize it, and take care of it. So all I did was show you where to bury the tree, but you're going to do just fine. So keep up the good work.
Okay, thank you, Larry.
Thanks for calling in, George.
Thank you. Thank you. Thank you. Thank you very much.
You bet. All righty. Okay, the next order of business is we got to take a look at the let's take a look at the gold market here for just a second because we have an interesting situation going on here in gold. Let's take a look at silver first because silver has actually held up a little bit better. We didn't make a new low on silver from November, which was totally amazing. Given the fact that, the rest of the commodities had absolutely been decimated. I mean, we made 1.618 expansions on most of these moves, and yet silver made what it consists of, a double bottom. The old low was at 1410, and we got down to 1432 on this run. We're not trading too much above that, but a little above it. So there's a potential here that silver could have done that. I'll cover that more in the webinar, the silver and the gold, just to see, what transpires, with these metals and where we are right now with some of those things that we're watching. Now, we've had a really, pretty good short covering rally. That one of the problems of doing this show is we got some really smart people here in TFNN in the Tiger's Den, and they say some really funny things, and I read them, and it causes me to laugh. We're going to take a little break here and then wrap up the show, folks. So we'll be right back after we come back, and we'll take a look at the New York Stock Exchange Index.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we're going to take a look here at the Dow Jones. We've looked at it before when we started the show, but we've got that pattern where we've rallied for 10 days up into the 786 retracement. Remember, the NYSE rallied to the 61% retracement. We did leave a minor gap, but not very much in the Dow today, so this pattern may or not be something to hang our heads on, but there's a potential that we could make 15,000 on the Dow this week, just based on the fact of what happened in 1987, and if it continues on like this. 1987 was caused by Secretary of the Treasurer George Shultz, I believe, was in Hong Kong and trying to make a deal with South Korea on something, and when he walked out of the meeting, he said regrettably, and when he said regrettably, that sent the markets in a tailspin. However, we didn't have access to the data back then like we do now. I mean, it took a long time for us to find out what was happening in China and Hong Kong and places like that. Now with the internet, it's instantaneous. We all find out together. So that, that's the situation that we have, that we're looking at here. But we do have some things that could make the market shake out quite a bit. Debt being one, complacency being another. The fact that our VIX index, has done, very, very little. Everybody is, basically thinks the Federal Reserve has our back, and maybe they do. That could be the thing that they're looking at. I don't know, but we'll have to let history tell us if that's going to be the case. So anyway, this is what we're looking at this week here. We have a real strong cycle date, as I mentioned before, coming in here on July 30th and July 31st when we have the full moon. And so that should be a pretty interesting time. But frankly, we've got a long way to go in this, in my opinion. We've started to see a few leaky holes in the bullish boat, and no one has a life preserver on that boat. I can promise you that, because they believe that the Federal Reserve has got their back, and like they had with the banks, that they can't fail. Well, we've seen what's happened in China, and believe me, they can incorporate controls more than we can. So live every day in an attitude of gratitude and try to do something nice for someone who has a lot less than you today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.